Do you desire to take perfect continuation trades, or do you struggle with entry due to fake breakouts and also not knowing when the pullback will end? If either of that describes you, then this is your session. I'm Wanjiru Kishangi from Forex Exploits Online Academy, and on this session, I'll be taking you through how to identify and also take beautiful continuation trade setups. First things first, once you open your trading platform and you have a tradable item of choice, on higher time frame, mark out your market structure. Why is this important? Because market structure is king in this business. So make sure you know how to do market analysis using market structure. If you're new or you're still struggling with market structure, pause this video, go back to my YouTube channel and watch this video. It's very, very important. And of course, if you're a total beginner, watch the other two videos. Very, very important. Now, I have a tradable item of choice and I've marked up my market structure. You see, since December 2020, it's been pushing down. Therefore, it's been creating a series of lower lows. If it was on the buying side, it will be creating a series of higher highs. This is very important because it gives you the higher time frame direction of buyers. Therefore, if it's creating lower lows, it means any continuation trade you take should be to the downside. That is very, very important. Now, what are continuation trades? Continuation trades are trades taken in line with the higher time frame direction of buyers. These trades are low risk and have high probability. Why do they have higher probability? Because of course they are following the higher time frame, meaning there's a lot of volume. If you get them at the perfect entry, they have low risk because the chances of these trades flipping against you are quite low since you're using the higher time frame trend or cycle. Now, where do you find such types of trades? These trades can be found either at flip zones or at reversal points. Now, what are flip zones? These are zones where money is changing hands. It could have been previously a seller's zone that has now turned to be a buyer's zone. So that could have been a resistance, then it was broken to the top side. And if the market comes back to the same zone, there are higher chances that the market will actually push higher. It all depends with this move here. There is a video on supply and demand that I've explained how this move will determine if this will be a flip zone or the market will actually come down here and negate all this. So you can watch that for more details. But for this session, we're going to deal with this as a flip zone. Now, on a reversal point, this is a point where there is exhaustion in one direction and it's a beginning of a new direction. Now, there are institutional reversal patterns. So you can also watch the video on institutional reversal patterns to note reversal points. Reversal points can be, for example, the impassive moves, the double impassive move, where we have exhaustion here and the market decides to change. Can also be the double bottoms, where we have the exhaustions at the bottom side, and now this becomes a reversal point, or it can be the triple bottom or triple top etc. Just note that the examples given in this session are for intraday trading, meaning you can use these setups to trade within a day. So you get into the trade and leave the same day. But if the same setups are identified on a higher time frame, you can still use them for swing trading. Now, what is advantageous, or what are the advantages of continuation trades compared to other trade setups? Because there are different types of trade setups in this market. One, they are higher probability. When we are talking about the quality, continuation trades are high quality. Number two, they also help the trader to avoid false breakouts. When we get to the chart, an actual chart, I'm going to explain how to avoid these false breakouts and of course, how these types of trades helps a trader to keep off from these false breakouts. And of course, the low risk. I had already mentioned the extreme low risk point and also helps in scaling in. Now, scaling in for beginners or new people in the channel basically means adding more position. Traditionally, you would have a trade here. And if this feels to be a flip zone, note this is not the healthiest place to place a trade, because at some point, depending with this move here, it may be violated, fake break, then the market goes higher. So if you had a trade here, then your stop loss would be hit. But if you wait for the break out of this zone, then that would be a good entry away from the flip zone. Now, examples. What examples of trade setups do we have as far as continuation trade setups are concerned? One, we have the flip zone trade plus the pattern entry. This is one type of trade, the flip zone plus the pattern entry. These are the steps to follow when you're looking for such a trade. One, on higher time frame, identify the flip zone. So we've identified this flip zone on a higher time frame. Number two, after the breakout, wait for the retest into zone. So now there's the breakout of the zone. Now you wait for this retest. After the retest has happened, confirm the trend change on the second leg of the dominant move using momentum. Again, this is not the best point to place your trade, even though sometimes almost maybe 60% it may work depending with this move back in, but it's important that you wait for price action out of that zone. So you could be having a momentum candlestick, getting out of that zone, and then from here, this will be low risk entry. Now, if this has happened, this is what we call the second leg, this area here. This is what we call the second leg of the dominant higher time frame move. Remember, we are still on higher time frame. All this is happening on the higher time frame. This means it can be on the daily, can be on the 4-hour, weekly, or at least 1 hour, or whatever higher time frame of choice that you pick. Now, after you've seen this momentum break out of the flip zone, now go to your lower time frame. Go to your lower time frame. And on the second leg, look for intraday pattern. So here, let me change my color. So in here, this is where now you go to your lower time frame. After this confirmation here, go to your lower time frame. And on this second leg, you'll be looking for an intraday pattern. You'll be looking for a pattern. Now, if you don't know what patterns to look for, there is a video on chart patterns. There's this video on chart patterns that you can watch so that you know the different chart patterns that you have. But we have wedges, we have triangles, we have channels, etc. So this is the video to learn all about patterns. So on the lower time frame, on the second leg of the higher time frame, you'll be looking for chart patterns. Note, the chart pattern should be on the lower time frame. Very important. Now, after you've identified your pattern, let's say here you identify on the lower time frame, you identify a triangle. It can be the symmetrical triangle or the ascending or descending triangle or a wedge or a channel, whatever you get on the lower time frame. Now you're going to wait. Do not trade inside the pattern. You're going to wait for the breakout from the pattern. Why are we waiting? For extra conference or extra confirmation. What is the advantage of being patient in this field is that it will give you extra confirmation. And what extra confirmation does to you is that, one, it gives you trading discipline. It also helps you not to get false breakouts. And also it will help you to flex your muscles when you're doing your lot sizes, since you'll be trading from a low risk level. So wait for the break. If this is the flip zone that you're using, you're going to wait for a shift candle out of that triangle. Now for a shift candle is the candle that breaks off from a pattern. If the shift candle is too big, of course, be very patient. We talk about sitting on your hands literally. So be very patient. The market may give you a discount. So it can be a 70%, a 50%, or 30% discount. And you can join the trade from this area instead of joining the trade here. But of course, Depending with how impatient you are, this is also a good place to take your trade. But if you're patient enough, you can enjoy that discount, and now you can move with the trade in the right direction. So those are the steps to take when you want to trade this example, the flip zone trade with the lower time frame pattern entry. Now let's get to a chart. Let's get to a chart example so that you may see that on a chart. So we have market analysis marked, and we've marked our flip zones, areas where it was a previous buy area, then it was broken to the bottom side by a red candlestick, making it a seller's area now. And now we wait for the market to come back to the same area and we would sell. Why are we looking to sell? Because our direction of bias is to the downside, and the flip zone was broken to the bottom side by a very huge seller's candle. So now when we go to our lower time frame, so let's have an example. So this is, let me clean up this chart a little bit. So when you go to your higher time frame, what you want to see on the higher time frame, now I have 4 hour as my higher time frame of choice. I want to identify a flip zone. So you see, this was a buyer's area. Then when it was retested, there was some buying. But at some point, the sellers came in really seriously, and they broke that zone with a very big shift candle. So I would not be interested to chase this trade. I would wait for the retest of the flip zone. Now I'm on higher time frame. So this retest of the flip zone, now on this, I'm going to wait for the market to reject off this zone. So you check the candlesticks around this area. Traditionally, you can get in, you can have a trade at this area of the flip zone. But what is, for this video, or what is the session on this video is, we're going to take continuation trades away from this area. We want to join this trade, but after all this retracement is done. Okay, so we're going now to go to our lower time frame of choice, which is the 30 minutes. These are flip zone. Traditionally, you would have gotten a sell from here, but now we want to look for a pattern. And here we have this wedge. We're going to look for a pattern and wait for the breakout of that pattern. You're going to look for a breakout of that pattern, and after the breakout, now you can join that sell trade comfortably, knowing there is no point in this market that that move will retrace or pull back against you. So if you take them back to back, like you have the higher time frame on this end, so you have this flip zone, and then this flip zone, you check the dates, is still the same time. Now, after the move has happened, since you already have a traditional entry here, you're looking for continuation. So to add more trades, you wait for the pattern to show up. And here we have our pattern. Once the market has broken down or broken out to the downside from the pattern, now you can scale in or you can add more position. Now look at this area here. It's important to know the type of break you have so that you're not taken out by this forced break. How you identify a forced break, of course, is based on the type of candlesticks that form in that region. So from this area here, you're free to join this sell trade and you can enjoy all this. So that is our first example where we're talking about the flip zone plus the trade on pattern entry. Now, option number 2 or example number 2. These are the videos that you can watch for more details on key areas, which are the flip zones and of course the chart patterns. Example number 2, we have what we call the flip zone plus now the trade setup. Instead of the pattern, now we'll be looking for a trade setup. Instead of the pattern, we look for a trade setup. Now, the difference between the two is the first one, you're looking for a pattern, but this second one, you'll be interested on the trade setup. Now, again, this is very important based on the type of trader you are. When you talk about trade setup, this can be break and retest, can also be candlestick, trading, can also be technical trading. Okay, so same step number 1 and number 2, you're going to go to higher time frame and identify your flip zone. So we have again our flip zone here. And once the traditional entry has been done on this second leg, this is where we'll be looking for our trade setup. So you can either have your EMA, so you could be having your MA here, or you can be having your trend line, or you can be having your fib, whichever your trade type of entry is. And once your rules are met, maybe you have this area as an axis. I already explained what an axis is on a previous video. So if this is an axis point, then you have your entry. So you can go to your lower time frame, and instead of looking for a pattern, you look for a flip zone or axis point. So on lower time frame, you can add moving average of your choice, a trend, or a fib. Let's get an example on that. Let's go to the higher time frame first. Go to the higher time frame example. So here we have our higher time frame, which is also Euro USD 4 hour. We have the flip zone. This was a buy zone that was changed to a seller zone, and now this is the flip zone. Now this is the same example that I had given on the previous setup. Now I want to use the pattern instead, the trade setup instead of the pattern. So you have the flip zone up here. It's a seller's region. You can have a traditional entry, or you can have your trend line set. You can mark your trend line and your moving average. Now the point where the trend line and the moving average have interaction, you see they have squeezed in, and there is some market price action happening around here. So let's do an example on the flip zone and the trade setup. So on higher time frame, you want to identify a flip zone, and this is Euro USD 4 hour. We had a buying zone that turned to be a seller zone. So you're going to wait for the retest of that flip zone. And this has happened on the higher time frame. Now we're going to wait for the candlestick to get out of the flip zone. We identify this area as our second leg of the dominant move. Then we're going to go to our lower time frame of choice. In this case, I'm using Euro USD 1 hour. You can now, when you're looking for trade setup, you can now add your trend line, and also your moving average of choice can be 20, 15, 13, whichever choice of moving average that you want. I have a video on moving averages and how each of them is different. Therefore, you can watch that to pick a moving average that works well with your trading style. Now, you're going to wait and see the interaction of your trend line and your moving average. You can also identify a lower time frame flip zone. On the lower time frame, remember this is the higher time frame flip move that is giving you a flip zone on the higher time frame that is giving you traditional entry. But because you're looking for a continuation trade, a trade where you can scale in, a trade where you can add more position, you can also go to the lower time frame and also identify other flip zones in there. And where your flip zone touches your trend line and has interaction with your moving average, or maybe you also add fib if you like to use fib retracements, that area is called an axis point. What you do is you wait for the candlestick to have a momentum, for a momentum candlestick away from that area. And once you have this is called a momentum candlestick that shows a lot of volume being pumped off that zone. And if this closes, now you can join that trade from that area, therefore enjoying this move down here comfortably away from the pullbacks. Remember, the reason you're taking continuation trades away from the traditional entry is because you want to do away with these pullbacks and take a trade that is almost perfect. So that is example number 2. Now, example number 3. Example number 3 of a continuation trade is now on the other side when you're using reversal points. Previously, we've been using flip zones. But now we want to do the same trade setups now using reversal points. A quick recap. On the flip zone, you want to have a higher time frame point where there has been exchange of money from either buyer side to sell side or sell side to buy side. That is on higher time frame. Wait until there is break of that flip zone, and then you go to the second leg on a lower time frame and check for either a pattern or a trade setup. If you like this video to this point, be kind to send a comment or leave a comment, like the page, and subscribe. Let us know what other videos you want us to have for you. Now, let's talk about when you're using reversal points. These setups will help avoid possible reversal after entry and also give great pullback entries with extra confidence. Now, reversal points are point of exhaustion. I already mentioned that you can watch this video on institutional reversal points to understand the different reversal patterns that we do have. And also for chart patterns, this is the video title to look for in the channel. So example number 3 will be having a higher time frame reversal setup. So we have a higher time frame reversal setup and a lower time frame pattern entry. Higher time frame, on higher time frame, you could be having maybe a double bottom, can also be a double top or triple top, whichever you like, or any other reversal pattern that you want. Any reversal pattern means there's exhaustion on each side. So there's exhaustion here, and that's why the market is reversing. We have exhaustion down here, and this is why the market is reversing. So on higher time frame, this is our reversal point. So traditionally, you could be having those entry here. But since we want continuation trades, we want the market to actually leave this area, and inside the second leg, we'll be looking for continuation trade. So these are the rules or steps to follow when looking for such a trade. 1, on higher time frame, identify the reversal trade setup. We have it here. This can be either of the institutional reversal patterns discussed on this video. Number 2, confirm trend change for confluence on the higher time frame. Now, how you confirm trend change is, of course, based on price action around this point. This is where you look for momentum candle. The momentum candle on a reversal point is very, very important because it's a good confirmation for trend change. So let's say you have an engulf here, an engulfing candle, or you just have a momentum candle to the top side. That is enough to confirm trend change. Remember, you're still on the higher time frame. Now, once this has been confirmed, then now this becomes the second leg of the dominant move. So this is the second leg of the dominant move. Now go to the lower time frame. Go to the lower time frame. And in here on this second leg, when you go to the lower time frame, this is where you focus on. You want to find a pattern within this second leg. So you go to a lower time frame and wait for any pattern to form in here. So you're looking for any pattern to form here. So it can be a wedge, can be a channel, anything, any pattern that shows up. You can watch these to know the different types of patterns that we have. Once you have a pattern now, you want to break. You are going to be patient. Forex trading is about patience. Be very, very patient until the market breaks out of that pattern you've gotten. Now the break again, if the shift candle is big, wait for the retracement or wait for a discount. And then after the break, if it's not first break, of course you know how to check first break by now. But if it's confirmed break, then now you can join the market to the top side on a lower time frame of your choice. So be patient, wait for break before taking trade on lower time frame of choice. So let's get to the chart and check out that example on a normal chart. So So this is higher time frame reversal, higher time frame reversal, and lower time frame pattern. So I have an example here. So my higher time frame of choice is the daily. So on the daily, see, we had this retracement, we were pushing up, so the direction of bias is buying. Then we have this retracement back, and then we have the reversal point. So we have this low and a low. So we can say this is a bottom being created. Then I'm going to wait for a momentum candle for trend change. Look at this candlestick here. It's a momentum candle, meaning we've exhausted this set. We've exhausted this pullback. We're actually pushing higher. We're looking forward to buy. Once I have this momentum candle, we can see now that the second leg has started, and therefore I'm going to go to a lower time frame. In this case, my lower time frame is the 1 hour chart. So on this second leg, I'm going to look for a pattern. And here I have this pattern here. Then I'm going to wait for the breakout of that pattern. And here you have a very big shift candle. Remember what I said, if the shift candle is too big, there's no need of chasing it out here. You're going to get some discount at some point, and you have that discount there. And so you can get into that continuation trade comfortably. If you do those charts back to back, this is what you get. So you have the higher time frame here, and you have the lower time frame. So you have the traditional entry on buy, and when you want to scale in, you want to add more position, wait for this pattern to clear. And again, why are we waiting for this pattern to clear? Because we said after the pattern, it basically means there will be no more consolidation to that side, and therefore it's lower risk now to join trades. For example, if you got in or if you scaled in for a buy here, what would happen? You would actually lose money because the market is still consolidating or it's still pulling back. So the good thing with mastering the pattern inside the second leg is that you wait for all this pullback to end, and you can actually add in position or join the original move and enjoy all this without suffering this. So the pattern will help you, or the pattern will come in handy to avoid the stress of these pullbacks. Okay, very, very important. So that is that example. And the fourth example of the continuation trade is the higher time frame reversal setup with the trade setup. Now this time, instead of looking for the pattern, now you'll be looking for trade setup. So the first step are still the same. On higher time frame, identify a reversal point. So maybe we have that. So we have that reversal point here. Then we're going to have our momentum candle getting out, giving us a second leg. So we have this second leg here. Then we're going to go to a lower time frame. And on the second leg, instead of looking for a pattern here, we'll not be looking for a pattern, we'll be looking for a trade setup. So on lower time frame, you can either add, now you're on lower time frame, so you can have your moving average, you can also have your trend line, you can also have your fib retracement. And on this area where there is a lot of interaction among your instruments or your tools in that matter, this becomes your axis, and this will give you your entry. Alternatively, you could be having a break and retest pattern around your trend line, or just any pattern, candlestick pattern on your axis point, and that will be your entry. Alternatively, you can go to lower time frame and look for a flip zone on the lower time frame. And so if this happens, this will be your area of entry, and the market will continue up. So this is what we have. So an example on the chart, an example of that on a chart would look like this. So this would be a perfect example where on higher time frame, I have USD CAD on daily. And then on the lower time frame, this will be my 1 hour. So I have my trend line, and I also have my moving average, and also my fib. So there's this move to the top side, but the shift candle is too big, so the fib will give me a good retracement, and you can see the point at which that retracement is happening, the best point, 61.8. You can do your entry from there. Another example on the same, you have the higher time frame. This is the weekly. You have this triple bottom. Then the lower time frame of choice would be the daily. You have this triangle. You wait for the shift candle to break out. There is the retracement, and then you can join that move. If you set your charts back to back, you can see that. Okay. So again, if it's on these high time frames, of course, you can use these two to actually swing it. All you have to do is be careful. Be very, very careful. So these are some of the examples that I've prepared for this session. Of course, open your charts, go back in there and find back test, okay? Find these patterns and see what really happens. It's always important if you can back test, and only trade what works best for you. On this end now, be fair, be kind, to actually subscribe to my YouTube channel. You can click this link to subscribe, click the notification bell so that every time I share a video, you will be notified. Also, do not forget to watch the other previous videos to add up to your trading knowledge. Also, follow me on either of the social media, the same name, Forex Exploits Online Academy. Until the next time, I wish you the very, very best. Thank you.